Homeowners insurance covers what your policy tells you it will cover. The coverage greatly varies from policy to policy, and it depends on things like the cost of your home, the areas that you live in, how close you are to potential dangers or damages such as rivers that would cause flooding, how close you are to fault lines for earthquakes, etc. So your typical homeowner's insurance policy would cover things like theft, fire, burglary, lost or stolen type of items within the home, and it could also cover things like flooding, tornadoes, hail that may break or damage your home, earthquakes even. But again, those natural disaster coverages are going to depend on your location. If you're located right on the San Andreas Fault in California, your policy is definitely not going to include any type of earthquake coverage. If you live down in somewhere in Louisiana, down by where Hurricane Katrina and flooding constantly occurs, you're probably not going to have flood coverage. So the insurance company is only willing to accept a certain amount of risk, and the risk has to be reasonable for the amount of premiums you're paying. I mean, if you think about it, the average cost of homeowners insurance is about $700, $760 in 2007. So to cover a $760,000 home, the insurance company has to take on a fairly low amount of risk. That would mean that the home could only be damaged every 1,000 years in order for it to sort of reach that break-even point. So keep in mind that the insurance company can't be taking on this great deal of risk. If a house is in damage or in danger of being flooded every 10 years, they're not going to take on that risk because it's just the cost to you would be astronomical. So this has been John Pinelli, financial representative, talking to you about homeowners insurance.